Hello, everyone, and welcome back to the Debate Podcast. I'm your host, Michael Brooks, and today we're diving into one of the most foundational debates in finance: cash or assets. Now, this isn't just a question of what's in your pocket versus what you own. It's about how we build, secure, and plan for our financial futures. Cash gives you immediate buying power, flexibility, and a sense of security, right? But assets, like real estate, stocks, or even investments in businesses, are often seen as the real key to long-term wealth. So what's the truth? Is cash the king of stability, or are assets the true power behind financial freedom? Today, we're digging deep into this one, and as always, joining me is my ever-thoughtful, never-holds-back companion, my second self. Second self, what's your take, cash or assets? Thanks, Michael. You know, this is such a loaded question because cash is like the lifeblood of our day-to-day lives. When people say cash is king, they're talking about something immediate and essential. Cash is power in its simplest form. Money you can see, touch, and spend. Imagine facing an unexpected expense or needing to act quickly on an opportunity. If you've got cash on hand, you're covered. You're not waiting to sell something or worrying about market fluctuations. Cash is there. It's tangible and it's liquid. People underestimate the security and freedom cash brings because it's something you can always rely on. It's money that you know you have control over without having to jump through hoops. Sure, assets are valuable, but they're often tied up, locked away, and sometimes hard to access. Cash is certainty. It's there when you need it, and that flexibility is incredibly empowering. You make a strong point about cash, but let's step back and look at the bigger picture. Cash, as much as we value it, is actually a depreciating asset. Because of inflation, the purchasing power of cash slowly but surely declines every year. So if you're just holding on to cash, you're actually losing money over time. Assets, on the other hand, have the potential to appreciate and grow in value. Take real estate or stocks. These assets generally increase over time and can even beat inflation. When you own assets, you're not just preserving your wealth, you're growing it. Cash is good for the here and now, but it doesn't build long-term wealth. Assets do. Assets give you equity, something that appreciates and compounds over time. Imagine holding onto a piece of property for 10 or 20 years. Its value increases, your equity grows, and you've built wealth without lifting a finger. That's what makes assets so powerful. They are the bedrock of future financial security and independence. But Michael, let's talk about something critical here: stability. Cash is predictable. You know exactly how much you have and what it's worth today, and you don't have to worry about fluctuations in the market or sudden dips in value. Assets, as great as they sound, are also unpredictable. Take real estate. Markets can crash, property values can plummet, and suddenly your valuable asset is worth far less than you thought. Stocks? They can swing wildly in a single day. People like cash because it's stable, and that stability brings peace of mind. When you have cash, you know what you're working with. There's no guessing game. Assets might promise growth, but they also come with risk, and that risk can be daunting. For a lot of people, especially those who can't afford to gamble, cash provides a kind of safety that's hard to beat. Why take the chance on assets when cash is simple, straightforward, and reliable? I see your point about stability, but if we're serious about building wealth, some level of risk is necessary. Think about assets like real estate or stocks. They may fluctuate, but historically they grow. Real estate, for example, tends to appreciate over the long term. Yes, there are market cycles, but in general, property values increase, building long-term equity. Stocks may be volatile, but they offer dividends, capital gains, and ownership in companies that are driving innovation. Cash, as safe as it feels, is stagnant. It doesn't grow. It just sits there, slowly losing its purchasing power. Assets, on the other hand, are alive. They have the potential to increase in value, providing a pathway to generational wealth. And while assets do carry some risk, that's what enables growth. True wealth building is about expanding beyond the present, creating opportunities that cash alone just can't provide. Assets may demand patience and strategy, but they're how wealth is built for the long haul. All right, but let's not ignore the flexibility cash provides. Cash lets you act quickly. Think about investment opportunities that come up out of nowhere, a stock market dip, a short-term business venture, or even a real estate deal where you need a quick down payment. If you've got cash, you're ready to go. Assets can be like golden handcuffs. They're valuable, but they restrict you. You can't just sell a property or liquidate a retirement fund overnight without facing fees or even losses. Cash, on the other hand, is liquid, ready for whatever comes your way. Life is unpredictable, and cash is what allows you to stay nimble, to adapt, to seize opportunities when they arise. Why lock yourself into assets that might not be there for you when you need them most? Flexibility is crucial, and you're right that cash gives you the ability to move quickly. But assets also create unique opportunities. For instance, real estate can be leveraged. You can take out a loan against it, use it to secure more financing, or generate rental income. Stocks, while volatile, can provide dividends that supplement your cash flow. Assets don't just sit there. They work for you, creating value and opening doors to more wealth. And yes, cash is flexible, but it's also finite. Once you spend it, it's gone. Assets, on the other hand, create streams of income. They grow and they multiply. This is the difference between active and passive wealth. Cash has limits, but assets can build on themselves, offering wealth that cash simply can't match. Here's something to consider, though. Simplicity. Cash is straightforward. You know what you have, and it doesn't come with hidden costs or complications. Assets, especially when you start acquiring multiple types, can become complex. Think about real estate. There's maintenance, property taxes, market research, and sometimes you need a whole team of professionals just to manage it. Stocks? You need to understand the market, pay fees, and monitor your portfolio. For a lot of people, cash is easy and doesn't require constant attention or expertise. Cash is ready to use, and there's a kind of peace that comes with that simplicity. No management fees, no tax headaches, just money you can rely on without worrying about depreciation or how to sell it. Sometimes that simplicity is worth more than the potential growth of an asset. Simplicity is valuable, but complexity often leads to growth. Wealth building isn't necessarily about ease, it's about creating something sustainable. Cash is simple, yes, but it's also limited by its very nature. It has a ceiling. You spend it and it's gone. Assets, though complex, provide a foundation for true financial independence. They allow for scaling, for compounding value, and for creating a wealth base that can support not only you, but also future generations. And yes, managing assets requires learning and a bit of a financial education, but that knowledge can be empowering. Once you understand how assets work, they provide opportunities that cash simply doesn't. If we're talking about breaking free from financial limitations, assets are the vehicle that makes that possible. So at the core, this debate is about security versus growth. Cash gives you certainty. It's dependable and tangible. There's no risk of a sudden market crash taking away your savings. No unforeseen property issues. Cash is safe. And for many, that safety is the foundation of wealth. Not everyone wants the roller coaster of asset management. Sometimes wealth isn't about maximizing every dollar. It's about having a sense of control and comfort. Cash may not grow in value, but it's not going to disappear on you overnight. Isn't there something to be said for the peace of mind cash offers, for knowing that your wealth is secure? I understand the appeal of security, But isn't the purpose of building wealth to make it work for you? Cash, as safe as it is, doesn't grow. Assets, with their risks, offer the potential to create wealth that lasts beyond our own needs. Think about legacy. Cash is great for now, but it doesn't leave much behind. Assets, however, can. A piece of real estate, an investment portfolio, these can be passed down, building wealth that spans generations. True wealth isn't just about feeling secure today, it's about building a foundation for tomorrow, something that can continue to provide value even after we're gone. Isn't that the real power of assets? And there it is, Michael, the crux of it all. Cash is about the present, assets are about the future. And maybe, just maybe, the answer isn't one or the other, but a combination of both. Listeners, we want to hear from you. What matters most to you? Financial security now, or the potential for wealth that grows over time? Would you rather have the reliability of cash at your fingertips, or assets in your portfolio, building a legacy? Head to the comments section, share your thoughts, and remember, wealth isn't just a number in a bank account, it's a strategy, a vision, and a choice. So which side are you on?